Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Monday, February 2nd, 2026, and we've got a fresh batch of insights from yesterday's market activity.
That's right, Ethan. We sifted through a moderate number of social media discussions, flagging a few key players. The overall sentiment is quite mixed today, with some strong bullish signals colliding with significant valuation and risk concerns.
Definitely a fascinating mix of companies, some showing incredible growth potential, others, flashing some serious caution signs. Let's dig in.
Kicking things off with Sandisk Corporation, symbol SNDK. Ethan, this one's been a real roller coaster. What's caught your eye?
Well, Brooke, the energy around SNDK is undeniable, even if some user posts initially mentioned momentum exhaustion. The overwhelming counter-narrative from the community points to robust fundamentals. We're talking massive AI investments driving demand, with the company reportedly sold out through 2026. News confirms a phenomenal 1,500% surge in the past year, with profits soaring by 672%, and Q2 EPS at 6.2, projected to hit 12 to 14 in Q3. Plus, insiders have been buying up shares, a significant 2.49% net increase in the last 6 months, showing real confidence. We previously rated SNDK as a buy as recently as January 30th.
I hear you on the enthusiasm, Ethan, and the insider buying is certainly compelling. But when I look at some of the foundational metrics, I see a current net profit margin of negative 0.11659 and negative EPS of negative 7.09. That's a stark contrast to the news. And let's not ignore a debt-to-equity ratio nearing 8. While the operating margin is strong at 35.5%, we need to be clear about past performance versus future projections.
That's a fair point, Brooke, but it's crucial to understand that those negative profit KPIs are historical and frankly quite outdated given the rapid changes we're seeing. The news and user commentary directly contradict those numbers, talking about profit spikes and soaring earnings now and into the future. The 61.2% revenue growth is a current metric that truly reflects the AI-driven demand. These future developments are expected to flip those negative profit KPIs dramatically.
So we're essentially betting on a complete turnaround of those lagging indicators based on forward-looking statements. It's a high-stakes play.
Indeed, but one with powerful backing from the industry. For Sandisk, SNDK, we're classifying this as a buy. The future potential, insider confidence, and current revenue growth outweigh the outdated negative profitability metrics and short-term technical concerns. This is an upgrade from some of its previous stay-away ratings we've seen. Next up, NVIDIA, a name synonymous with AI. We saw a post titled, "NVIDIA just rugged OpenAI, $100 billion deal dead," which sounds pretty dramatic. What's the real story here, Brooke?
Well, Ethan, the initial post was quite the shocker, but it was quickly debunked as misinformation by a strong majority of users. NVIDIA's CEO, Jensen Huang, actually confirmed plans for a massive investment in OpenAI. So the core bearish catalyst was in essence a non-event, which pushed overall sentiment to bullish. Revenue growth is fantastic at 62.5%, and a net profit margin of 53% is phenomenal. This is definitely an AI winner. We've had a lot of buy ratings for NVIDIA recently, with the last one being January 27th.
Exactly. It just highlights NVIDIA's indispensable position in the AI economy, continuously expanding its influence. It's truly a powerhouse.
And that's where my caution kicks in, Ethan. While the company's performance is stellar, its valuation metrics are extremely stretched. We're looking at a PE ratio of 47.66 and a price-to-book ratio of 39.07. That's a significant premium, suggesting a lot of future growth is already priced in. Furthermore, the debt-to-equity ratio is high at 9.102, which adds a layer of risk. And here's the kicker. We've seen significant insider selling, over 2.4 million net shares sold in the last 6 months. That's a strong signal from those closest to the company that perhaps the current valuation is rich.
I see your point on the valuation, Brooke. It is something to monitor. But for a company with such a pivotal role in a booming sector, you could argue it's growing into that valuation.
Perhaps, but the insider selling in particular suggests prudence for new investments. For NVIDIA, despite its strong fundamentals and critical role in AI, the high valuation multiples and substantial insider selling lead us to classify this as stay away for new positions at this time. This is a downgrade from many of its recent buy ratings. Moving on to Micron Technology, MU, another memory giant tied to AI. We saw it mentioned alongside Sandisk with similar momentum exhaustion concerns. What's your take, Ethan?
Right, Brooke. Some users did highlight short-term technical overextension, predicting a 10 to 20% pullback. But like Sandisk, there's a powerful counter-narrative focusing on Micron's long-term potential as a crucial AI bottleneck. Many believe the company is sold out for 2026, with massive investments being made. News outlets are calling it an AI winner, with expectations of quadrupling earnings this year. And here's the really compelling part. Insider buying is huge. Over 860,000 net shares purchased, a 31.45% increase in holdings. We've given MU a lot of buy ratings recently, including as recently as January 29th.
The insider buying is a definite positive signal for the long term, Ethan, and the expected earnings growth is impressive. However, the current price is very near its 52-week high, having rocketed from around $90 to $415 in a year. That parabolic run does scream overbought on a technical level, supporting the short-term pullback argument. Its PE is still high at 41.488, implying that much of that future growth is already factored into the stock price. While the fundamentals like 56.7% revenue growth and a 28.146% net profit margin are strong, the short-term risk is hard to ignore at these levels. I understand the short-term caution. A healthy pullback could actually be a good thing, a chance for the stock to reset before continuing its long-term AI-driven ascent, especially with that strong insider conviction. Agreed, but immediate entry seems high risk. For Micron Technology, MU, our classification is stay away for the short term, primarily due to technical overextension and current high valuation, despite its very strong long-term AI-driven potential and impressive insider buying. This represents a downgrade from its recent buy ratings. All right, to quickly wrap up today's market commentary, here's a look at our final classifications. Investigate as buy, Sandisk Corporation, SNDK. Investigate as cautious buy, none. Investigate as speculative gamble, Micron Technology Inc., MU. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for joining us on the Daily Hunt for Multibaggers. We'll be back tomorrow with more AI-generated insights to help you navigate the markets. Until then, happy hunting.